Hello traders, if you are struggling to refine your trades from a higher time frame bias to sniper entry, this video is for you. Alright, so I'll break it down in this video step by step from daily bias straight to the sniper entry for those precise trade executions. But don't skip ahead. Okay, stick with me until the end where I'll break it down with real chart examples so you can apply this immediately in your trading. All right, so guys, if you are really serious about leveling up your trading this year, hit that like button and subscribe now. It really helps a lot. So let's get started. All right, so let's try to understand daily bias. So in simple terms, the daily bias just gives us our direction for the day. All right, and for that day, we are only focusing on two things, just two things, guys. Okay, the first one is liquidity. The second one is points of interest. So when we are talking about liquidity, we are talking about the high, okay, the high of the daily candle and the low of the daily candle. That's the liquidity we are talking about. For the points of interest, we are talking about the fair value gaps and order blocks. All right, as we all go along, on the examples, we'll find those things. Okay, so the only thing that you need to know on liquidity, the previous daily high and low, they act as liquidity zones. They are the major liquidity zones. Okay, if price sweeps the previous candle's high but closes back inside, it's bearish signal. It's a bearish signal. You have a bearish daily bias. But if price sweeps the previous candle's low, okay, but doesn't close below, okay, it's a bullish bias. But a full body candle close above or below the previous candle determines the bias also. Okay, so if we move like this, you have a candle forming above previous candle's high like that. Okay, it closed with a full body candle above. It means you have a bullish bias. Okay, it means you have a bullish bias, and that bias is going to apply on the next candle, not this candle here. Okay, so today's candle, if today was Tuesday and this was Monday, this Monday's candle's close is what is going to determine Tuesday's bias. Okay, so this closed above the previous candle's high, which means on Tuesday we are looking for buys. All right, even this one closed above, so you have a bullish bias. So the next candle, what you are targeting is this candle's high right here. Okay, if you have an entry, if you have buys, you are going to target those highs. That is going to be like your extreme target. Okay, all right, in a case where you have, just like I said from the beginning, if you have the previous candle's high being swept, so first of all, here you had a bullish bias, meaning this next candle, that was your target. But if the target is taken out, but instead of this candle closing above that previous candle's high, high with a full body candle, instead it closed inside there, then the next candle is going to be just sales. You are looking for sales on the next candle. Okay, all right, so if the next candle sweeps this candle's low, which was going to be your extreme target, and still close with a full body candle below, then you have a what? A bearish bias. But stick with me right now, guys, okay? Because if you have a bearish bias here, but you also have a bullish point of interest right below that bearish bias, you have to consider the bullish point of interest. This is going to have a majority say of what happens. Okay, so if you already have a bearish bias, this candle obviously closed below that candle's low with a full body candle like that, but where it dropped matters. So you have to look to your left and see what is surrounding that candle. If there's nothing, you are okay, you can take your sales. But if you have a bullish point of interest, which in this case is a fair value gap, and right down below there you have an order block, okay, you have to consider buying, okay, so that even when you buy, whether price takes out this low or not, you have to find a buy setup, okay, and your target, your extreme target, is going to be all the way up there. All right, so when you have a candle again coming, and if you have a candle that is coming from a bullish point of interest, these tend to be stronger than these candles, okay. So if this candle is coming from especially an imbalance, it's just going to take out a swing high that was left there, which is just external range liquidity, which is just another topic, okay. So this candle closed above this previous candle's high. So what are you expecting on the next candle is buys, okay. Of course, you'll be targeting that high there, all right. You don't necessarily have to hold all trades all the way to that high, but it's very important that you have a point, you have a target that is going to be like your final destination. That is what those extreme targets are for. All right, okay. So when that is taken out and then you still see price going to the upside, this is again another bullish scenario, okay. So in the next day you are still looking for buys. If another candle forms and then takes out your extreme high there, your extreme previous day's high, and instead of closing within that 24-hour period above, it closed within the previous candle's body, what you are looking for now the following day are sales. This is a bearish bias. The color of the candle does not matter. As long as it took out the previous candle's high, you can start selling. Therefore you are looking for potential sales, okay. Underline that word, you are looking for potential sales. All right, do not just enter because price has opened here and then you put your stop loss. This is a daily candle, it's going to wipe you out, okay. So you still need to go down the lower time frame, which will be shown in our real chart examples, okay. So if you are enjoying this explanation so far, guys, please consider liking this video and subscribe. All right, price continues going to the downside. If it sweeps the low and then the body closes within the previous candle, you are looking for what? For buys again, okay. As long as price has reached your extreme target there, that is fine for you. There's no need for you to hold all the way to targets that you can't even see. As long as you have taken your profits there, it's fine, okay. You just continue going. Okay, here you can see price was at the bullish bias, but instead of just going straight to that high there, it first took out this low. These are the best trades that you will ever find, okay. When price does this, already it's in a bullish bias, but it had to take out the low first. This is like a propellant, okay. It's like a catalyst, it's like fuel, okay. It's going to really prepare you all the way to that high, and if you take out that high, that is good for you. So you just continue waiting. You're already in a bullish bias, so your next, if tomorrow you have another trade, you're just looking for buys. All right, let's go to the real chart scenarios. All right, so we are on the real chart. This is volatility 75 1s. This is the daily chart, okay. These are the daily candles. Now you can see this is the current market, so we are going to use that. I'm not going to analyze all of this. It's going to take way too long, but we can just start all the way from the bottom there. Another tip that I can give you is when you see this massive reversal on any chart, you have to look to your left and see what was already there. Okay, so for you to understand this, there was a point of interest right here, which is a fair value gap. Okay, so there's a fair value gap there on the daily chart. So that's where market had to reverse from. Now, when we start with this candle right here, the candle that reacted to that fair value gap, okay, so this candle took out previous candle's low. This low was taken out. And when price takes out the low like this, on the next day here, the next day what you are looking for are buys. And what is your extreme target? That high all the way there. Okay, this is going to be your target right here. Okay, so if you find any buy setups, okay, if you find buy setups, of course consider liquidity is on the lower time frame. If you get that, you can hold all the way to that candle's high. Okay, so this day price did not go all the way to that high, but the other day price went all the way, okay, and then took out even the other day's high. So this is a bullish scenario. This is a bullish scenario, guys. Now, the moment you always have to look for candles high and low, and also the point of interest to your left. So you can see price went all the way up, and what do you have here? You have fair value gap. Okay, you have a fair value gap, and there's an order block right above it. Okay, so when price tries to do things like this, it took out, so you have a bullish bias here. So if you took your trade from down here, of course you are going to hit your extreme target, which is previous day's high, which is fine for you. Okay, just like that. But you also have to remember that you are in a bearish point of interest. This is a bearish point of interest. Okay, so here you are looking for sales. You have to remember, guys, you are in this order block right here, just above the fair value gap there. Okay, so you are trying to look for sales, and how you look for sales is price has already taken out that high, which is just okay for you. So if you find any sell setups, you can sell. Okay, of course, down here you have between that high and that low, what do you have here? You always look to your left and see what you have. Okay, just right below that candle there, that is a fair value gap. Okay, that's a fair value gap. So okay, so when price opened here and took out that high, first of all, you are already in a bearish scenario, so this low is going to be your target. Let me remove this other guy there. Okay, so this candle's low is still your target. Okay, of course the target may not be reached just on the same day. You can hold even the other if you have enough patience. Okay, so after taking out this candle's high, you're already in a bearish scenario. This actually gives you even more profits. Okay, if you find a sell setup and then your target is there, just remember that you have a fair value gap down here. So the moment price hits that fair value gap, you have to start looking for buys now. Okay, In fact, if price hits your target, your extreme target here, wait for the other day. Okay, remove all the profits because there's no reason for you to hold all the way down. You are in a fair value gap. So you wait for the next day to start and then start looking for a buy setup. And you can already see price already took out even this previous candle's low, and it did not close below that. The fact that it took out the previous candle's low and reacted to a fair value gap, obviously you're supposed to look for a buy setup here. So what is your target? Again, you are targeting that candle's high right there. Okay, right there. Let me make this smaller. Okay, I want you to see something. I want you to make this mistake. Make sure all this is lined up very well. Okay, right there. Okay, okay, right there. So you can see price took out that high right there. Okay, after taking out that high, can you see that small bump right there? Okay, that is showing. Let me do this. I don't want you to make a mistake of no, just because it's too small to see, so I can't. Yeah, so you can see that it closed above the previous candle's high there. Okay, you can see right here. So it doesn't matter how small it went through. Okay, if it wants to close below, it's very obvious. So here you are still looking for bullish setups. Okay, so when price opens here, you are looking, this is going to be, I know it's a short, um, it's like a short target there, but still you're okay. And also if you know sell if you know buy side liquidity and sell side liquidity, you would also be considering this. Okay, because you have equal highs there. So if you take a buy, that is definitely going to be your target. Okay, so price is still going to the upside. This closed above also. Okay, so when price opens here, what is your target? That is your target, your high. This candle took out the target but closed just within that candle there. So what are you looking for? You're looking for sales. And when this market opens, your target is where? This is going to be your target right here. Okay, this is going to be your target. So when it takes out the previous candle's high there, your target, you already know that it's bearish. You have your daily bearish candle. Just try to stick with me, guys. At the end of this, we have to go down into entry time frame. Okay, for us to move all the way from daily bars to entry time frame. No analysis whatsoever. Okay, it's very straightforward. Okay, so price takes out previous candles low and then body close within. What is your target? That high. Okay, this high taken out, the body close within. Okay, what is your target? This low here, that low right there. All right, this has been taken out here. This has been taken out, and where did it go? Price went all the way down. There's a single candle order block right there. Okay, that is where price went to and then reacted and started going to the upside. What is your target with this when this opens? If you have enough, if you have really enough patience, you can target two candles if you want, which I really don't advise. If you feel like no, your target is too short from where your entry was, you can do that. Yeah. But the only time that I really find it like easy to target the extreme highs is when you have price doing things like this, making equal highs. Okay, that is the only time I find it easier to target those highs. All right, so even when you start having these inside candles, if you had an entry here and then your target was that side there, these are some of the entries where price was already going to the upside, but instead of going all the way, all of a sudden you find that, yeah, it just goes all the way down. If you found a trade entry down here, this is where risk management comes in. You have to make sure it doesn't go to your stop loss, but to break even, okay, so that you don't lose anything. All right. So if you have such a candle, overall, you are still in a bullish bias. Okay, overall you are still in a bullish bias. If you want, you can just wait for one candle to take out this high or this low for you to start trading. Okay, you can sacrifice 2 days if you want. Yeah, so when this candle comes, the one that swept this candle's high, when it swept that candle's high right there, taking out all those equal highs and then close like that, then you have a new candle to look at. Okay, also when this candle's low was swept right here, okay, when it was off, this is showing a bearish scenario. Okay, so when price opened right here and then dropped, this is going to be your target. All right, but you have to look at what you have down there. You already have a single candle order block. Okay, you have this single candle order block right here. So this is a point of interest, a bullish point of interest. And like I said, points of interest are going to win. Okay, when when you are considering daily high and low, if that candle is already in a point of interest, consider that point of interest, and this is a bullish point of interest. So if you had an entry down here, your target of course is going to be all the way up there. Okay, all the way up there. All right, guys, there are a lot of candles here, so you just continue following the same steps. Okay, take the high taken out, you are in a bearish scenario. When price opens here, what is your target? That low. Again, price just took out that low and closed within you. Where are you? You are in a bullish scenario now. Price opens, that is your target. Target taken out, price close within. Okay, you are in a bearish scenario. Price opened, try to take out that high. If you have a sell setup, this is going to be your target, which was hit all the way down here. Okay, again bullish, just like that. Okay, so this is the current market right now. Okay, this is the current, so we'll try to look for okay, so price took out that high there, which means you are in a what? Bearish. Okay, that is the high which was taken out. So here we are in a bearish bias. Okay, we have a daily bearish bias. So when you are trying to enter on the next day here, this of course is going to be this right here. This is going to be your target when you enter somewhere there. Okay, this is going to be your target. Here again, price was continued going to the downside, which means the new target is where? That is going to be your target right there. Okay, so first let's try to look at this right here. We'll just go straight to 1 minute. Okay. All right. So right there, okay, let's just go back. I want to show you. I don't want you to be looking at this and think it's a different trade. So this candle is a what? This is 3rd February. Okay, this is 3rd February. So even when you go to 1 minute, it's supposed to be 3rd February. Okay. All right, so that is the peak right there. That is the peak right there. Okay. Okay. Now, this is where you have to apply. If you want, you can use from 15 minutes to 1 minute. Okay, but I'm showing you how you can move from all the way from that daily bias and then you go all the way down. Okay, so you can see price was just going up, but your bias is saying bearish, which means you are first looking for at least a market structure shift for you to take that trade at this. Okay, but you can see price just going up to the upside. Now when it reached this level, price started dropping. Okay, the first thing it did, it took out this low right here. You have a pullback here, so that is a market structure shift. That is a market structure shift. After that, what you are looking for is for price to retest an imbalance. Okay, so you have an imbalance here. You have an imbalance right here. Okay, which was tested. Not just an imbalance, the other thing that you have, because it's very risky for you to just be looking at an imbalance, you are going to risk a lot. Okay, you don't just have an imbalance, you also have a breaker block right here. You have this breaker block right here. Okay, and that breaker block, you are going to use it for your stop losses and those things. So you are not going to enter on the breaker block, wait for price to go into that fair value gap, so that when you enter here, when you enter right into that fair value gap and put your stop loss above there, of course you'll be removing your profits as you go along based on your risk management. But this line right here, this is the previous low. This is the previous day's low. So that is going to be like your extreme target. That is going to be your extreme target. If you go back to 24 hours there, the daily chart, it looks like a small movement here. Okay, from that high all the way there, it looks like a really small movement, but in actual sense, okay, But in actual sense, this is a risk to reward ratio of 1 to 15. That's really decent, guys. You can grow your account with that. Okay, so going to the next day, this was 3rd February. So you have to go to the 4th of February. Going to 4th of February here. So you can see I did not hold this trade all the way until, if you want, you need to, if you are just waiting for that candle to close, you can do that. Okay, there's nothing wrong with that. But if you are like me, you don't have patience, you are not going to take that 1 to 38 risk to reward ratio, which is 1 to 40 something risk to reward ratio. Okay, even if you close here, you really haven't lost anything, guys. All right, so this closed below the previous candles though with a full body candle, so you are still looking for sales. So when this candle opens here, you can just put mm, price opened right here, okay, but went all the way to the upside there. All right, so if you find an entry setup all the way up there, and this, you can see this price did not go all the way down there, but still, if you want, you can still get something out of it. Okay, so going down again. Okay, okay, it's 4th, yeah, 4th February. 4th February. If you want, if you are considering the 15-minute analysis time frame, it's just going to be the same, because here the only thing that you are looking for is for price to take out your inducement there, and then price goes all the way to some point of interest. Okay, but in this case, I just want to show you how you can go all the way to that 1 minute time frame, which is going to be very, very easy. All right, 4th February, 4th February, 4th February. Okay, okay. Mm, 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 mm. Okay, so in any case, guys, you still have to look for, you still need to look for, um, you still need to look for, price has to change, it has to make a market structure shift at a certain point. Okay, if it's not doing that, it's going to be very hard for you to find a nice entry. All right, so this is where we drew our line, not all the way up there. Okay, our line was somewhere down here. All right, so even here, look at this. When price takes out that low, okay, some people enter volatility with time sessions. You can see this is New York. Yeah, when price takes out that low there, what are you looking for? What exactly are you looking for? First of all, it has already this is a market structure shift. This is a market structure shift. If you want, you can where's the fibs? If you want, you can first use the Fibonacci, okay, and try to find at least a fair value gap that is going to happen right above the 50% level there. Okay, so when that happens, When that happens, if you don't want to enter your trades into that fair value gap because you don't want to put your stop loss like somewhere that if it's too big, price can give you these simple second short right here. I don't know if you can see it. So you can see the candles that are reacting to this fair value gap right here. Okay, I'm showing you how you can get extra confirmation. They are respecting that fair value gap that is in a premium zone. So price is reacting to that. You can see price going up and down and stuff like that. Okay, and then all of a sudden you have this single candle order block. Okay, this can be used for refining your trade. Instead of putting your stop loss all the way above there, price made this single candle order block right here. It took out the extreme high, okay, right here, and then got retested right here. So when you enter right here, you can put your stop loss above that and then see how it runs. Okay, if you didn't catch your trade on this day, 4th February 2025, if you didn't catch it all the way up there, okay, because even there are really nice setups there, the ones that even took out inducement. Okay, right there, if you didn't enter all the way here, okay, trading is nice, guys. Okay, just put in a little bit more of some effort. Okay, it's not something that is too complicated. Okay, so with daily bias, the reason we use daily bias is just for you to uh, at least try to have a final extreme target, okay, on a particular day. You really need that. You don't have to be entering trades and then you are scared of where you are supposed to get out, from. Okay, it doesn't make any sense. So such trades are really going to at least give you not a little bit of edge, a lot of edge. Okay, because not only are you going to be comfortable taking off profits, you are also going to be comfortable holding a trade, knowing what is already on the bigger picture. All right, guys, so if you like this video, please leave me a subscription, like it, and also you can join some mentorships that are still running. All right, guys, until next time, happy trading.